Are you tired of jumping from one strategy to another without seeing results? My name is Loaded Forex, aka No Signal, No Entry. Have you ever stared at your charts looking confused, taking trade after trade, yet still ending the week unprofitable? Every Forex beginner and struggling traders knows that frustration. But today you are about to discover the only entry confirmation you ever need as a day trader. This entry confirmation is simple, powerful, and proven to help you trade with real confidence in the market. This video breaks down the exact strategy that turns hesitation into clarity and losses into consistent setups in the market. If that sounds good, please take a moment to like this video, subscribe to our channel, and turn on the notification bell so you never miss another powerful Forex trading tutorial lessons like this. And also, if you are interested to be part of our community on Telegram, where you will get access to free weekly profitable signals and market insights, it doesn't cost you anything to join. Just click the link below this video description and be part of a supportive trading community that is focused on helping you grow and finally see consistent results. And I will see you after the intro. One of the major reasons a lot of Forex beginners or unprofitable traders are not profitable is because they don't have a blueprint guiding their decision in the market. The moment the price action comes to the zone where they want to buy or sell as their point of interest, they just execute without any criteria, right? But at Loaded Forex Academy, we don't execute like that. We wait for price to talk to us before we execute. So in today's video, I'm going to show you guys the entry criteria you need to execute loaded strategy blueprint. If you look at what is happening on gold chart right now, buyers are now the one in charge of the market. So let's look at the overall direction of the market right now. Once upon a time, price invalidated this short-term downtrend. Then the buyers came in and they took charge of the market for a few weeks or a few months. Right now, buyers are the one in charge of the market, and you can see the overall swing level. The price action created low here, higher high, higher low swing level, higher high swing level, then higher low swing level. Then we're expecting a new higher high swing level. Then price will give us a new higher low swing level. Then continuation of the bullish structure. Our overall sentiment is bullish. That means buyers are the one in charge of the market, and we don't want to do anything against the decision of the buyers. We want to ride the market with the ruler of the market. And this particular zone is our loaded zone, right? Our loaded zone area where we want to execute is also known as PO high, our point of interest. We want to exercise a lot of patience and wait for price action to mitigate our loaded zone, which is our entry zone, before we execute this setup on gold market. Let's observe the price action right now. One thing you must learn as a professional price action trader is to learn how to wait in the market. It's a must. If you can't wait, if you are not disciplined enough, Forex is not for you. No matter the strategy you are using, whether you are using SMC, you are using ICT, supply and demand, support and resistance, short pattern system, blah, blah, blah. You must include patience and discipline into your trading system before you can become a profitable trader. The most important thing is patience to wait. Markets will always reward patience, right? And the Forex trading is structured in a way to take money from the impatient traders and hand it to the patient traders. The price action encounter an obstacle around this zone here, right? There was a wall, or there is a wall of resistance around this zone here that stopped the price action from breaking to the upper side. Then the sellers, they took advantage of this resistance here, and they sold the market at this resistance zone here to the downside a little bit. Let's pay attention to the price action. Then the buyers came in as a result of support zone here. If you pay attention to the historical data, you realize that price once reacted here as resistance before the price invalidated resistance to the upper side. So this place now turned to support zone. Then the buyers came in, they pushed the price action to the upper side for the second time, right? So let's pay attention to the candlestick. Then the sellers came in. They are trying to take charge of the market again at this resistance zone, right? Price once reacted here, then price sold a little bit, came back again to mitigate the resistance zone. So let's see what the price action will offer us. Finally, the sellers took charge of the market as a result of this second rejection, right? And when the price action mitigated this resistance the second time, look at the weak rejection they left behind. This weak rejection here is a sign that sellers are warming up to take charge of the market. And the name of this candlestick that left this long weak rejection at the resistance is pin bar, right? If you don't want to call it pin bar, you can call it inverted hammer, right? Or shooting star. Whenever you see this pattern, it's a sign that sellers are warming up to take charge of the market at the resistance level. All right, before I forget, if there's any specific challenge you're facing right now in your trading journey, whether it's understanding a strategy or how to manage your risk or even building a trading strategy, let us know in the comments and we'll make sure to cover it in the future. And if you look at the structure on 30-minute time frame, price action created a low here, higher high here, then higher low here, then price now created equal high, then price invalidated the neckline of the equal high. Now, this establishment of this equal high or double top on 30-minute time frame of gold right now establish the heavy or 100% presence or domination of sellers in the market right now towards our PO high, which is our loaded zone. And as you all know, for those that have been following our tutorials on YouTube, by now you understand our entry criteria, entry confluences or criteria. Number one, we use volume reduction. The second one, we use weak rejection, while the third one is entry level, right? Or the third one is change of structure. Change of structure in the market, right? Then the fourth one is what we call CTB. The full meaning of CTB is counter trend line breakout, right? So these are the 4 entry confluences that we use all the time. Let's pay attention to the price action right now inside our loaded zone, which is our PO high. If you look at the momentum of the candlestick that invalidated the support zone here, it was a healthy bearish candlestick. Let's pay attention to the next candlestick formation, another healthy high momentum bearish candlestick. The amount of sellers present during this session is way higher than the amount of sellers. What we are supposed to do right now is to wait for price action to give us or present our entry confluences, right? The first one is volume reduction. We need to see low volume momentum inside our PO high. Now, these high volume candlesticks, we can't execute right now because the interpretation of these candlesticks means that sellers are heavily in charge of the market on 30-minute time frame, which is our entry time frame, right? What we will do right now is to wait and exercise a lot of patience to see more of volume reduction. And if you pay attention to this, you can see volume reduction here. You can see the body of this candlestick way smaller than the body of this candlestick. The amount of buyers or sellers available during this section is way smaller or lower than the amount of sellers present during this session. So this is volume reduction. You can see the momentum of the candlesticks here, very low. It's a sign that the sellers right now, they are struggling to push the price action below our loaded zone. So seeing this formation of candlesticks signify or gives us assurance that buyers are warming up to take charge of the market, but we still need more confirmation. That is why we always follow our entry criteria. The second one now is to see weak rejection. You can see when the price action was approaching towards our PO high here, you can see the buyers left a long wick at the bottom of this bearish candlestick. Now, when the sellers push the price action and mitigate our entry zone, you can see weak rejection at the bottom of this candlestick here. Another weak rejection here, another weak rejection here. That is sign number 2. That is sign number 2. Then the third step is change of structure. If you look at the overall direction of the market, is a bullish structure. Swing higher high, swing higher low, swing higher high, swing higher low, then swing higher high, right? So this place represent our swing recent or represent our recent swing higher low. And the rules is price must not trade below this recent higher low. In as much the price action is still trading above this recent higher low here, our sentiment is still valid to the upper side. If you are enjoying the valuable forex knowledge we are sharing in this video, we would truly appreciate your support. Please take a moment to like this video, subscribe to our channel, and turn on the notification bell so you never miss any of our powerful forex trading lessons. Doing this helps the YouTube algorithm to recommend our videos to more forex beginners and unprofitable traders who are eager to learn how to trade profitably. On the 4 hours time frame right now, you can see the trend is bullish. So let's go back to our entry time frame, which is 30-minute time frame. If 4 hours is bullish, then 30 minutes must be bullish as well, right? We want to make sure that our 30-minute time frame is also bullish. So we need 30-minute time frame to be bullish, right? But right now on the 30-minute time frame, the structure is not bullish. The structure is bearish. Why? The price created equal high here, then price broke the structure to the lower side to create a new lower low. So we want price to give us a consolidation here, then break the structure to the upper side to give us a valid bullish structure on 30-minute time frame before we can execute. Let's continue and see what a price action will offer us. Now the price action created a new lower high here, right? This is a brand new lower high around this zone, right? Then the price action sold a little bit to create a new higher low around this zone. Then we have low here, higher low here. Then the price action invalidated the last lower high during this bearish structure on 30-minute time frame. Right now, the structure is no longer bearish on 30-minute time frame because the structure has been invalidated. Lower low, lower high, higher low, then new higher high. So this is the structure. So we are back to bullish structure right now. The final step right now is to establish our counter trend line by connecting this point to this point right now. So we want to connect the body of this candlestick here, the body here connected to the body of the recent lower high around this zone here, because price just invalidated the lower high to the upper side. Here will be our entry zone. Then we're going to put our stop loss below here. Then we're going to target ratio 1 to 2 risk to reward. Let's see what the price action will offer us on this trade. Now price is already moving in our favor. Price is heading towards our TP level right now on gold. Let's see. Finally, price smashed our take profit level. All right, guys, that is the end of today's video. If the information we have provided so far has added value to your trading journey, inspired you, or blessed you in any way, we would truly appreciate your support for the channel. The best way to do that is by simply clicking the like, subscribe, and turn on the notification bell, which tells YouTube this content is helpful and pushes it out to more traders who might need it. And also, don't forget to stay connected with us and continue receiving practical tips and strategies, insights that can make a real difference in your trading result. Your engagement goes a long way in keeping this channel alive and allows us to keep creating valuable content for you and other traders around the world.